Welcome back to Seamless Xtra as we continue to explore the latest trends and innovations in the world of digital commerce.
Welcome, everyone. Thank you for joining us today. Today's Seamless Extra. Today, we're joined with Roger Berger, who's the head of Fintech at the BNP Paribas office in Germany. So thank you very much for joining us today, Roger. And we're excited to learn some insights about Fintech and the industry from you. So
Thank you so much for having me, Carolina.
Of course. I'll just go ahead and jump right into my first question then, which is, how do you see the intersection of traditional banking and fintech evolving in the coming years? And do you see any differences in between European countries?
Yeah, thank you. It's a great question. When I look over time, I think the view of fintechs and traditional financial institutions has changed. I think, if we go back just a short couple of years, 5-6 years ago, a lot of fintech business models were still quite new, nascent, and maybe even peculiar. I think this resulted in financial institutions, both insurances and banks and brokers, kind of taking a step back and looking at this new breed of companies and tech startups developing, and initially seeing them a lot as competitors and as competition. I think this has changed dramatically over the last even 24 months. Today, fintechs are essentially three things to a financial institution. It depends very much where the financial institution stands. So we are in the same market. We are by and large looking for the same type of customers and clients. So yes, they continue to be a competitor to traditional or conventional financial institutions. But at the same time, financial institutions have opened up and also see them as partners. So depending on who you speak to in the financial institution, and a lot of financial institutions, depending on size, will partner with fintechs and see them really hand in hand in conquering a certain client or customer base. And again, depending on the financial institutions, but if we look at us at BNP Paribas, we also view fintechs as clients, meaning we actually cater to fintechs and provide solutions. Happy to go into that into more detail. But ultimately, fintechs fall within one of these three buckets. So they can be competitors, and most of the times they are competitors. They are partners, and at the same time, they can also be clients of financial institutions. And I think if you look at it, does this differ between European countries? Generally, I'd say not really. If we look at, if we follow the money, and I always say you need to follow the money and look where are the most prominent fintechs, and investors tend to find them. They'll be in the UK, they'll be in Germany, and they'll be in France. That's where 75%, give or take, in any given year of VC and PE money flow. And as such, financial institutions in these countries don't perceive fintechs very differently from these three buckets. And I think it's very much a view of where does a financial institution stand? What is its size? What are its solutions? More so than in what country is it headquartered in or what country is it active in. So I think the larger the financial institution, the more the fintech is perceived in all three of these buckets by different parts of the institution. And the smaller or more localized the financial institution is, the more it will perceive a fintech maybe in a singular bucket, maybe just as a competitor or just as a partner or just as a client.
Gotcha. Okay, and that actually segues perfectly into our next question, which is that BNP Paribas is a global player in the financial industry. So how exactly do you, as head of fintech, cater towards the fintechs that you work with?
Yeah, so I think we as a team see them as clients. We work with founders, we work with their C-levels, and we work with their investors and follow the same goals they have. Their goal is to grow their business. Our goal is to grow their business and help them in that process. So what we do is we work across the capital stack or the capital structure. We help out on the equity side, on fundraising, on the investor outreach, the equity narrative, the equity story, and also on valuation. But at the same time, for asset generative fintechs, we will deploy our balance sheet and fund those portfolios of assets that the fintechs originate. And ultimately, we also dive in a lot deeper as an institution and also provide our infrastructure. Concretely, that means that we will, provide operational support in the form of either custodial services or accounts, specifically when required in conjunction with regulatory license that a fintech may have or will have over time. There are certain safeguarding requirements under certain licenses, and we're happy to provide that infrastructure required to fulfill regulatory requirements that fintechs have. And we do this at a pan-European level. So I think that's really in a nutshell, in short, what we do. Always excited to speak to founders and investors on how we can be helpful.
Mm-hmm. So from a regulatory aspect, so what is the role that you believe that regulation plays in shaping the fintech landscape across Europe, since there's different regulations in different parts of the continent?
Yeah, so I think regulation levels the playing field for all players. And it's beneficial, in my view, to financial institutions, but it is equally beneficial to fintechs, and maybe even more so to fintechs and financial institutions, in the sense that not only does it allow for fintechs on this, going back to our original question around, the three different buckets: competition, partnership, and clients. When it comes to competing or fintechs competing with financial institution, regulation can be very helpful there, and in particular, EU regulation can be very helpful, as acquiring a license in one jurisdiction and passporting it across the EU gives access to the complete EU market in a standardized way, and it gives protection to the founders, their investors, and the fintech itself, that it complies with regulation across the continent as soon as it acquired one license and passported into new jurisdictions. Equally, the major licenses have been harmonized. So you've got banking license, which are harmonized across the EU. You've got EMI or e-money licenses that are harmonized across the EU. But then there are licenses that are not harmonized. And I think that's where you see an easier go-to-market for a fintech. So I'll give you an example. If a fintech wants to offer a factoring type of business, it will be probably well advised to start in the Netherlands, where factoring is an unlicensed business. But if you just take that one step further and want to expand beyond the Netherlands and come to Germany, then in Germany, for example, you'll require a factoring license, which is a non-passportable license. And then as you move to, let's say, France, France requires a banking license to provide factoring services. So you've got a patchwork of licensed and unlicensed requirements across the EU for certain types of businesses, like factoring, like leasing, that actually hinders the ability for the fintech to easily and safely expand across the EU. Again, strengthening the point that regulation is good in the sense that it gives a level playing field and it allows for an easy expansion across the EU. When we look at the UK, I think, post-Brexit, the UK has its own licensing regime within the UK. There's been some grandfathering historically that's bound to expire. And as such, they're a little different. Ultimately, a lot of fintechs choose to get licenses in the UK for the UK market, or acquire a company in the UK if it's a EU fintech, and equally if it's a UK fintech when expanding into the EU, it chooses one jurisdiction to get the equivalent of its UK license in the EU to expand across the continent.
Okay, gotcha. Thank you for that answer. So now I want to look a bit ahead. So in the future, what do you feel are some of the trends or developments that you anticipate in the fintech ecosystem in the EU?
Sure, absolutely. So I think this is not EU or UK or Europe specific, but I think these are more overarching trends that we see in North America, but equally in APAC. So not to be late to the point, but AI has been part of fintechs before AI was a hype, and it is what it is today. So fintechs have been using different forms of artificial intelligence, neural networks, or other techniques when they were doing, for example, underwriting, when looking to prevent fraud, when monitoring cash flows, or even so far as to customizing the outreach to consumers or customers in general. So I think AI has been a part of fintech, and one of the successes of fintechs over the last 5 to 10 years has been driven by the implementation of AI and AI technology very early on. And that's why, in part, they do a great job at what they do. And that's why they are able to offer services, solutions, and products that traditional financial institutions offered with less full-time employees and a more tech-driven and more tailored solution to consumers ultimately. So I think this trend will continue. So it's not a new trend for fintechs, but it's a continuum of a trend, probably propelled with the AI boom that we're seeing now. So that's on the one hand side. Then I think another overarching trend is where we see a convergence of models where non-fintechs are integrating fintech models into their daily business. And I think Apple is a great example of that. They have their Apple Wallet with payments. Then you've got a German player with Zalando, which is an online marketplace, which has its own payments arm. So again, a fintech model integrated as a subsidiary into their daily business. And then Amazon is so broad, it's got a number of fintech models integrated. Initially, credit card, and depending on the jurisdiction, they'll offer merchant financing. They'll offer invoicing to consumers. So I think that's again an overarching trend we see where traditional companies outside of fintech, but within tech, are integrating fintech business models, and there's convergence between fintech as a vertical within other verticals of tech. I think if we look at the fintech vertical on its own, I think there's two things we've seen starting mid 2023, and this is something that will continue going forward. One is that investors are placing a high value on vertical leadership or runner-ups, or those fintechs that are creating a new vertical, and are placing their capital to those, or giving it to those founders where they perceive vertical leadership to be attained or sustained. And equally, sustainable growth is key today. Top line growth is something desired by investors, but equally a strong contribution margin, which then over time follows into a strong EBITDA and a strong bottom line, with a opening of the markets, the IPO markets, and a potential exit for those investors. That's crucial today, and it will continue to be crucial for the next 18 to 24 months.
Great, thank you for that. Sounds like exciting times ahead for the future of fintech. That's unfortunately all we have time for today, but thank you again so much, Roger, for joining us.
Absolutely. Thank you so much for having me, Carolina.
Of course.